Hey, what's going on, everybody? Welcome to Bonafide Investing, where we talk all things high yield investing, options, investment ideas, as well as investment goals. If you're new to the channel, welcome. Long story short, we've been experimenting here with high yield strategies for about 2 years now. And I have built what I call an all-weather high yield portfolio that uses high yield ETFs as well as options to generate enough income for me to, number one, pay my bills, and number two, maintain and pay down my margin over time. This is only about 20% of my net worth. So this is not the only way I invest. This is not the only way I would suggest anybody invest. So nothing here is investment advice, not now, not ever. So please do your own due diligence before making any investment decisions and choices. I was once a financial advisor, but I'm not responsible for your wins. I'm not responsible for your losses. To those of you who have subscribed and liked the channel, thank you. I appreciate you so much. You've made this a little over 4 months now with the channel very fun. So thank you for that. Please keep the comments coming. Please keep sharing, liking, subscribing. Please help support the channel. I really do appreciate you. Hope you all had a good week. What a week. I got to travel, got to see some friends and family. So that was a huge blessing. Really thankful for that. A lot of changes in the portfolio. Want to just kind of review the week where everything sits with Cash for Life here and just discuss, I think, the things that are most important at this time. So diving right in, I did sell QDTE. So I dumped that. I like QDTE. I still like it. I sold it to, number one, the distribution was starting to be very similar to something like a QQQT or an XPay, right? So it's like, why own those if I don't need to, right? Or the reason I don't want to own QQQT at a 20% yield, where QDTE has been paying about 20% and in a kind of an inconsistent 20% lately. I want my distributions weekly, if not better, right? So XPay and QQQT, they pay that monthly distribution, which isn't really going to work for what we're doing here. So with that said, I wanted to dump that. I put a lot of it back into QLDY. Okay. That's been a very consistent 40%. I'm very happy with QLDY. It's got big moves on when markets have big market days, big movement days. Don't mind that. It's fine. I'm dollar cost averaging back in about $30 per market day back into QLDY to offset some of the volatility, the NAV erosion, what have you, always buying income, right? So got rid of QDTE. I did balance out Ulti and Salty. As a matter of fact, earlier in the week, I put some of the Salty into Ulti, right? Still sticking with my YQQQ. It's down substantially. I think my cost basis on it's right around like $12.15. No worries. I've had a ton of distributions from it. But that's a good thing, right? Markets went up big time this week, right? They had a good week. They had a good bounce. I think it's a short-lived bounce. Right? My QQQ and SPY puts were up, I think, right around $15,000, $16,000 between them. Now they're in the red. That's a good thing to me, right? That cash protection, I'm happy about that. I want to see my inverse ETFs, right? As well as my long puts in the red. Means good times are here. I think it's short-lived. I think we have topped out from this bounce. That's my opinion only. I think we are headed lower, and I think we're headed into a prolonged bear market that I think is going to last years. I really do. And I don't think we'll see new highs for potentially a decade, if not longer, right? I say this because of cycles, because of history, because of math, right? I think we have so much debt, so much uncertainty. And I think we're going to go through a period very similar to from the 40s to the 70s that we saw with interest rates going higher, inflation going higher. And I think we're going to get that sort of environment, right, as investors. So be mindful of that. I could be wrong. I hope I'm wrong, right? But I don't think the next 20, 30 years will look anything like the last 20, 30 years. My opinion only, okay? So I'll keep my hedges on. If this market keeps going up higher, I'll probably add to my downside. And I'm still in the bear camp. Somebody called me a perma bear. I'm not a perma bear. I'm not a perma bull. I think if you're going to invest, you want to be kind of a bullish mindset, thinking, okay, if I'm going to use these markets, these assets to fund my living, right? I think part of us, we always have to be hopeful for a better future, correct? Meaning that assets will probably hopefully keep appreciating over the long term. But in the short term, I think there's things that are different, right? We got to be mindful of the short term. I can't allow a market crash to wipe me out, right? I'm back to working, right? So I've got to stay hedged. So I don't mind missing out on a 10 or 20% up rally. I care if I lose 40, 50, 60%. So again, Cash for Life is my pension, right? This is my business. This is how I fund my life, right? So with that said, I want to be mindful of risk before return. Success to me is if this account is the same balance in 10 years, that's success to me. Okay, so that's how I see it. Anyways, without going on that, those are the main changes. I did do a lot more poor man covered calls. I bought a USO put midweek, sold it for about $1,000 profit. I bought a Boyle call, just kind of a speculation to see if we can get a bounce on natural gas over the next month. We'll see how that goes. I think all I risked was $200 or so on that, so no big deal. If natural gas goes nowhere or crashes, don't really care. Did a poor man's covered call on Coke, Procter & Gamble, Roblox, and Walmart. So I added those. Contemplating doing one on Johnson & Johnson. I'm doing them on bigger stalwarts, right? Bigger blue chip companies that I think will have a much better chance of doing well if we do go into a market correction or market crash, okay, which I do think is coming. So I want to do these poor man covered calls on companies that are stable, right? So again, just more poor man covered calls there. Did some rolls. I think I rolled Dominion out. I rolled, let's see. I rolled Dominion, I think Campbell Soup. And I did do a roll same day on, I think it was, give me a second here. It was either Procter & Gamble or Walmart. I did roll an extra week. I got basically the same premium for a week out as I did in a month. So really happy making, 30 to 60% on these. I'll take 30 to 60% annualized over the 3 to 5% dividend with much less risk, right? With much less capital being put up. Somebody left a good comment. I think it was yesterday or the day before. They want to see a poor man's covered call more in depth. I'm going to try to make that video this weekend. That way, any of you doing a poor man's covered call to grow your account, I'm going to, do more on that. So that's where the options are. I've already generated, let's see here, $1,762 of premium income for the month of April. So happy with that. I do want to give you guys some updated stats on Cash for Life. So total annual income with current holdings, let's go to those. So current shares, latest distributions, whether they be, weekly, monthly, whatever. We're sitting at $175,071.60 annualized. That is on $548,012 invested. So let me run that yield real quick. I don't think I updated that component. Give me 1 second. Just going to run some numbers here. That's an annualized yield of 31.9%. So it's come down from 34.2% last week. So I'll take that 31.9% all day long. That $175,071.60. If I do that monthly, that is a monthly income of $14,589.30. Okay, so 14,589.30. That does not include, by the way, any option premium that I'm earning as well. Okay, so keep that in mind. I add that back at the end of the month when I get my statement, my distributions. I add back my options premium income as well. So some of the sectors, pieces of this, my short ETFs, my YQQQ and SLTY, those are totaling 21.3%. What's nice about those totals are about in line with the margin I'm using. So right now they total 116,620, and my margin used is 118,887.66. So that gives me a little bit more peace of mind, right? I really like that. Having that short component be pretty equal with the margin amount that I'm using. My long ETFs, if you think about like the NASDAQ, the Russell, the S&P 500, those currently are 30.5% of the portfolio. My fixed income, my TLTW, my long bond exposure is 10.6%. My gold and real estate. So those make up 17.9%. The options values currently between all the calls and puts make up 8.3% of my allocation. And finally, Ulti, my ultra high yield exposure, is 11.4%. I don't think I'd want any more Ulti or Salty in the portfolio. I want to kind of cap them at 2,000 shares at this point, but I've been really happy with their performance since owning Ulti for the third time and owning Salty for the second time. Really, really happy with them. As a matter of fact, last week I saw a lot of days where they were both up rather well, and they're still spitting out those 60 to 70% distributions on average. So really happy with those. Again, the long short job of Ulti and Salty is just a cash flow. This account, just put more cash into this account every week, and then I'm gonna use that cash more strategically. As a matter of fact, Ulti and Salty alone are paying my mortgage, all my insurances, my one car lease payment that I have on one of the two cars, and my food, as well as even a few bills on top of that. So just the two of them, really heavy hitters, really happy with those. So this past week, let's talk about some stats in the market. Last week, the NASDAQ was up about 3.8%. S&P was up about 2.9%. Gold was up about 4%. Long bonds were up about 0.1%. And real estate was pretty flat for the most part. Robinhood, let's see the past week, again, without distributions, we were down about 1%, a little over 1%. I'm okay with that. Again, I think with the hedges really pulling that down, and my long puts did see some downside. I also bought, more, let's see what's going on here. I don't know why it reset, but it did. Okay, there we go. So it did come down a little bit. I'm okay with that. Again, it's not accounting for distributions. It really, really does. So I got to add those back in, which I know is a few $1,000s. The past month, the NASDAQ is down about 5%. The S&P is down about 5%. Gold is still down about 9%, 10%. The long bonds are pretty much flat, and real estate is up about 1%. So the past month here, according to Robinhood, we're down about 0.9%, again, without distributions. So, very happy with that, considering markets have been down about 5 times that in the past month. So overall, happy with Cash for Life. It's doing the job. Now, the main thing I wanted to talk about in today's portfolio update, right, is something that I've been overlooking, and I think that's mostly my fault, right? So I apologize. If you're building out a high yield portfolio and you're doing it where you're living off the income, if you're using some margin responsibly, this number right here says your margin buffer is $258,346.77, right, or 60.2. Now, you guys know I've said it many times. I like to keep my margin buffer above 50%. If I start falling below 50%, something's up. And what I've found so far with Cash for Life with the current allocation is my margin buffer goes down about 1% for roughly every $10,000 down the portfolio goes, right? So with that said, and I'm throwing out rough numbers here, if we went down about $100,000 in Cash for Life, my margin buffer would drop down to about that 50%, okay? Just to give you some numbers. I'm fine with that. Now, this margin buffer number is what I live off of. Somebody asked me, out of the $548,000, that's what you live off of. Well, not really, right? And without sounding cheeky, it's not really what you're living off of, right? It's the margin buffer amount. This 258,346.77, I can withdraw, I can use it for my bills. I can use it for emergencies. I think I told you guys a couple weeks, I had emergency dental surgery, right? That was not cheap, even with, the insurance. So this is where this margin buffer number is so important. I can use this to withdraw. I can go to the ATM. I can move money into a bank account, withdraw cash from an ATM. I can pay my credit card expenses off, right? I can pay my utilities, my mortgage, whatever that is. That comes out of this number, okay? So this is the number I watch. This is the number where, God forbid, I need a new roof. I need, emergency something for one of my children. Again, so I want to just talk about that. And I want to also be clear, right? I live in a very expensive part of the country. I live in Southern California. I don't eat top ramen. And there's nothing wrong with eating top ramen. I've been there. I don't, but I still live frugally. I live responsibly with my bills. I've got a set budget, and I've made a video in the past on why it's important to have a budget, know what's going in, what's going out. So all the money for Cash Flow Life, right? All my bills go out of this account, right? And all the distributions stay in this account until they leave for bills. So, my expenses, especially for where I live, is not, I would say I live pretty frugally, but also I like to travel. I have hobbies. My kids are in sports and activities. We still do things. We still enjoy what God has given us, but we're also not out I don't just go out and blow money on stupid stuff, right? So, or at least I try not to. I do my best with that. So again, that margin buffer number, that's the number you want to watch. That's the number you say, okay, hey, this is what I can live off of. And what you want to be mindful of is you're not drawing this number down like crazy each and every day. This number for me has been at 240. It's been at 270, right? It's been kind of all over the place. But having that over $250,000, that gives me a lot of peace of mind, especially when Cash Flow Life is paying me, on one of my holdings twice a week and on most of my holdings every week, right? I think TLTW, as a matter of fact, and the NEOS funds are the only ones that pay monthly. Okay. So again, still trying to build this account around the NEOS funds, around QQQI, SPY-I, IAUI, IYRI, and then the iShares TLTW. Trying to build it around those. TLTI NEOS does have an equivalent, but the yield is so low. I would just rather buy TLT and sell covered calls on it. You'd probably do better. So some of my thoughts there. I don't mean to ramble today. I just wanted to make sure that you guys understood that you're always keeping an eye on your margin. You're always looking and seeing, okay, how much margin am I using? Keep in mind that on poor man covered calls, whenever you buy those Leaps calls initially, that's going to eat up 100%. But you're paying far less, right? So instead of going out and paying, I'll give you a quick example and I'll make a video discussing this further. But you go out and buy, let's actually, let's look at this real quick. Okay. Walmart. Let's use Walmart as an example. So let's go down here what I did this week. See if I can find it. Okay, here we go. So Walmart, right? So I bought one contract. I think Walmart was sitting around 100 and I don't even know, maybe 120 something a share, right? So instead of putting up, let's say $12,500, okay, I just bought a call to control 100 shares for $35.25, expiring in March. Okay. Now, that's 11 months out. And what I did was I simultaneously sold the call for $157, right? So right off the bat, I sold a 1 month. So let's do this. $157 times 11 months. If we were to annualize this, right? If I were to do this normally on, let's say 12,500, go out and buy 100 shares of Walmart, I'm only getting about a 13.9% return, right? Let's do this again. It was 1727, right? The 157 times 11. Let's do that on 35.25. Now I'm getting 49% annualized. Okay, that's why I like the poor man's covered call, especially on stable companies. So again, it's using that Leaps leverage, right? Using that Leaps as your collateral, right? To then sell calls on it. And then I rolled one out a week later, right? For another $101. So again, you could almost say, let's just be conservative and say, okay, 5 weeks, right? Out of the 47 a week. So we're probably pushing 60, 65% just on Walmart, just on my first rolls. Will it be like that every time? I don't know. It could not be. But the point is, that's how you generate some good income off of a lot of these good, stable companies. So wanted to kind of show that real quick, why I think the poor man's covered call can be so powerful in an account, right? Especially when you're trying to live out of your brokerage or even grow it, right? So I think that's enough said there, right? I'm going to make a week ahead video, talk about some things. Again, these markets, in my opinion, are not healthy at all. When the administration can come out and say one thing and drive these markets 2 or 3% each way, there is nothing healthy about that, especially when there's little to no proof about anything really that's happening or going on, right? So again, very emotional driven markets. Man, these markets go down 10% and people think the world's ending, right? So again, my concern is that the government, the Federal Reserve, both in tandem have done everything they can to manipulate the business cycle, manipulate these cycles that we need to see that keep markets healthy, where we get 20% washouts, the generational 80% washouts, and then every 20 years or so, the 40, 50, 60% washouts that these markets need to stay healthy, to wipe out the froth, to wipe out the companies that really just, suck capital and don't produce anything, don't have any real true return, right? So again, we'll see how this goes. I think we are in for a reckoning. When is that going to happen? I don't know. Nobody knows. Please stay away from people who say they know. But I personally think it's on the horizon, right? I don't think that the valuations, there's little to no value left in these markets. So I stay hedged. I'd recommend people stay hedged. Again, not investment advice, but like I said, I'd rather miss out on the majority of a 10, 20% upside than a market correction or crash. So stay close to God this weekend, guys. Trust him, lean on him. He's all that matters at the end of the day. Ignore the noise, ignore the politicians and the bankers. I've always said they don't care about you. They don't. Hope you guys have fun with today's video. Have a great day.